Exercise 4. Mizuno Company uses a sales journal, a purchases journal, a cash receipts journal, a cash disbursements journal, and a general journal. The following transactions occur in the month of November, and we're asked to journalize the November transactions that should be recorded in the cash receipts journal. Mizuno uses a perpetual inventory system. The cash receipts journal is used for any transaction that would include a debit to cash. November 3rd, the company purchased $4,500 of merchandise on credit from Abbott Company, terms net 20. This transaction would be a debit to merchandise inventory and a credit to accounts payable. It does not debit cash, therefore it's not included in the cash receipts journal. November 7th, the company sold merchandise costing $1,188 on credit to EHAN for $1,305. Subject to a $26 sales discount if paid by the end of the month. This transaction results in a debit to accounts receivable, a credit to sales, a debit to cost of goods sold, and a credit to merchandise inventory. Since it does not result in a debit to cash, it is not included in the cash receipts journal. November 9th, the company borrowed $3,475 cash by signing a note payable to the bank. This transaction is a debit to cash and a credit to notes payable. Since we're debiting cash, we will include it in the cash receipts journal. We include the date, November 9th, the account to be credited, notes payable, the dollar amount of our debit to cash, $3,475. This transaction does not affect sales discounts, accounts receivable, or sales. The dollar amount of the other account being credited, notes payable, is $3,475. And since this was not a sale, we do not record cost of goods sold. November 13th, Iuno, the owner, contributed $4,775 in cash to the company. This transaction is a debit to cash and a credit to the owner's capital account. Since it includes a debit to cash, we include it in the cash receipts journal. November 13th, will be debiting cash and crediting the owner's capital account. The debit to cash is for the cash receipt, $4,775. This transaction does not affect sales discounts, accounts receivable, sales, and the other account being credited, Iuno Capital, is credited for $4,775. The transaction does not affect cost of goods sold or inventory. November 18th, the company sold merchandise costing $189 to CNAP for $336 cash. This transaction is a debit to cash and a credit to sales, a debit to cost of goods sold, and a credit to merchandise inventory. So we include the date, the account to be credited, which is sales, the amount of the debit to cash, $336. There is no sales discount, nor is it a collection on an account receivable. We credit sales for $336, and then we record the cost of the sale, debit cost of goods sold, and credit inventory for $189. November 22nd, the company paid Abbott Company $4,500 cash for the merchandise purchased on November 3rd. This transaction has a credit to cash, not a debit to cash. Therefore, we will not include it in the cash receipts journal. November 27th, the company received $1,279 in cash from EHAN in payment of the November 7th purchase. On November 7th, the company sold merchandise costing $1,188 on credit to Han for $1,305, subject to a $26 sales discount if paid by the end of the month. Since they are paying us within the discount period, the amount of the cash receipt, the amount received from Han, is $1,279. The amount of the discount, $26, when added to the debit to cash, is the $1,305 receivable balance. Accounts receivable is credited for $1,305. Since this was not the original sale, we do not record a credit to sales, any other accounts, or the cost of the item sold. November 30th, the company paid salaries of $2,250 in cash. This transaction has a credit to cash, not a debit to cash, and therefore is not included in the cash receipts journal.